So glad you are with us on Conquering Retirement. Brad Johansen along with Northern Alliance Financial CEO Lance Gilman. Blake King joining us as well. Always good to be back with you guys.
Good to see you.
Back here again.
Back again, Brad.
Trying to help you guys out, trying to figure out retirement and conquering it in the way that you should be able to do it individually, not just like everybody else. So we're putting together something. Lance always tries to come up with something new, and you may have seen this before. This may be something that you probably want to take advantage of. NAFTaxTest.com is a site where you can scan the QR code on your screen right here at the bottom, or you can go to the website. Why do I want to do this? Well, I've been told that taxes are going to be less for me in retirement, and yet for most, it's just not true. Well, NAFTaxTest.com will give you an idea of what you have, what Uncle Sam wants from you, and maybe some strategies to move forward with diffusing the tax time bombs that you may have. Tax prep, tax planning. What's the difference, Lance?
Sounds so exciting, doesn't it?
I know. We love
It's
talking
just super
taxes.
exciting.
Yeah, let's do it.
Yeah. Taxes, tax prep, tax planning. It's very important, actually. Even though it's not very sexy, it's not very attractive, it's not very exciting. But what is exciting is this, Brett. If we can take some planning and get more money into your pocket versus giving it to the government, that's exciting.
That is exciting.
Are we excited about that?
I am.
Okay. When we talk about tax preparation, we're talking about actually who's doing your taxes, whether that be H&R Block or some software that you're using or whatever the case may be. That's preparation. But planning is something different. It's just like retirement planning. And the more that we can get on the forefront of that plan, the better that plan's going to be. The more money we're going to actually be able to put into your pocket versus Uncle Sam's.
All right. So why is it so important to engage in tax planning? And I think we talk about runways all the time. The quicker we get on the tax planning runway, the better for us because it gives us more strategies. Yes?
It does. It does. Because the thing that's super fascinating about taxes is our tax brackets are progressional, right? So certain dollars are taxed at a certain percentage. Then once you go to the next tax bracket, all those dollars are taxed at a certain percentage, so on and so forth. And so if we have the ability, which we have tax planning software, if we have the ability to truly drill down and identify what's your adjusted gross income, what's your gross income, and then if you're on Social Security, what's your provisional income, what type of deductions are going to come at specific ages, we can actually start planning for that right now, and that helps us also from a cash flow standpoint. For instance, if you have money in a 401k and you start taking systematic withdrawals because you're retired, there's a mandatory 20% federal withholding. Well, for people who have an effective tax rate of 20%, that you've got to be making a lot of money in retirement. So what if we actually drill down that number and say, hey, you actually only need to withhold 10% in taxes and still get the same cash flow that you need? What does that mean? That means the remaining 10% that you would have paid in taxes stays in your portfolio, continues to grow, and provides you with a greater cash flow over time just by running a simple analysis, right? And we are able to actually identify that before that even comes because we have this tools and the softwares to map out what that's going to look like 5 years down the road.
So taxable accounts. People are going to NAFTaxTest.com and it will ask you, what's your qualified money? What's your tax-deferred money? What are we looking at as people are beginning this quiz to say, what do I get taxed on? What are those accounts that I should be looking at?
Yeah, so it's the structure of the accounts that you have, current account structure. So your current account structure would be anything that you have in your qualified account. So that would be your 401k, 403b, or your IRAs. So traditional IRAs, those are all qualified dollars, which means what? They're pre-tax dollars. So which means what? Your taxes, it's not like you never get taxed on them. It's just deferred over time until what? Until you start taking those withdrawals. And so then some of your other taxable accounts would be like what's in your savings account, for instance. Or maybe you have a stock account, maybe you have a brokerage account, whereby if you're selling positions and you have capital gains, then we have to pay capital gains taxes on what we sold in our positions. Dividends are taxed at standard income rates. So it's very, very important to understand what types of accounts you have from a tax perspective. And that's why some of these quizzes help us, because they put your dollars in certain buckets, whether they're qualified pre-tax, whether you're taxed as you go, or maybe in a Roth account, for instance, or municipal bonds, for instance, that you're never taxed on. So you've got tax deferred, tax as you go, and tax never. And so we start to, if you're not sure of how you're currently set up and where some of your funds go, that's why it's important to talk to an advisor. Make the call, come in, and let's figure out what kind of buckets you have, because until we figure that out, Brad, we can't figure out a strategy.
Yeah. As we move, and I talked about this at the opening, do I need to start changing my strategy? If I start hearing this, when's the earliest I can start managing some of these buckets that I'm working on? Because all I've been told is if I just stick as much as I possibly can in my 401k, I'm good. That's my plan. That's what I was told to do. So I overdo it. I get matched to a certain point, and then I just throw the rest in as well because I just want to throw savings in. That's not managing where our taxes are going. Can you help me with that, at least for people who are in that working stage or the end of their working stage and trying to figure out what I should continue to do with my 401k as far as taxes go?
That's the purpose of us, right? Like helping you come in and meet with us. You talk about, hey, what is the most important thing that you're trying to accomplish from a taxation standpoint in retirement, right? And then we can start implementing actionable items today to help you see that to the finish line, so that when you reach that retirement, you are in the most tax conscious place available, because we've been planning for it for the last several years, right? There's been a plan that we put in place and that we're going to try to see to fruition. And then when it's time for you to retire, it's like, hey, we've had this plan. We've talked about it every single year for the last 3 years. You ready to start implementing? And they're like, yeah, let's get after it, right? Let's keep as much tax dollars in our pocket as possible.
So the idea is, what do I have? What does the government want? How much can I keep? NAFTaxTest.com will give you some of those answers. I apologize. You can't unsee the numbers. If you've been saving and saving and saving and not paying taxes, it can be eye-popping as to what the government wants now, a little bit later as you take out RMDs, a little bit later as you pass them on to your next generation, and what you could be saving if you start implementing strategies. How do I do that? Probably need some help. That's when you make the call to 877-241-7430 to try and get Northern Alliance Financial to become your retirement partner. An idea of planning beyond prepping. 877-241-7430. Let's put together a complimentary written financial plan for you that makes sense to make your money last and keep your money in your pocket. We'll be right back.
I got pulled into financial advising space back in 2011. I started my career in Kansas City, Missouri, just kind of progressed throughout the industry and ended up getting my certified financial planning professional designation. And when I left Kansas City, I moved to Maine, and now I'm here with Northern Alliance Financial. What pushed me in the direction of the financial planning side of things is throughout my life, I've been really good at math. I've always been kind of a people pleaser, as well as just really caring about people intentionally and wanting what's in their best interest. And so it was really just a harmonious fit using my math skills as well as my ability to relate to people and be empathetic with them in their situations. I want to be able to get to know them, find out what their hopes, dreams, and wishes are, things on their bucket lists to see if we can make that come to fruition. And so it's really about building a good long-term working relationship. So I take a vested interest in my clients' interests as well as their passions, and I really just try to help whatever it is they're trying to accomplish, utilize the resources they have to their best of their ability.
Glad you're with us on Conquering Retirement. Brad Johansen with Lance and Blake, Northern Alliance Financial. We're talking taxes, which is why we will put back up on the screen for you, NAFTaxTest.com. It's a test you can't fail, but some of the answers that you will have as you put your information in might make you feel like you're failing, except there are strategies that we can put in place to try and minimize your tax time bombs over time. We get into moving into our tax history and why it's beneficial, because nothing about taxes feels beneficial right now. And yet we're in that time, and with this administration and with the legislative risk that we constantly face, we know for a period of time, Lance, we're in the third best marginal tax bracket that we can possibly have in our nation's history. So we take advantage of what's good while it's good, even if it doesn't feel good right now.
Yeah, absolutely. And I think that that's the key, is that legislation can change, and it will change because administrations change and tax law can change. And that's why it's important that you're working with an advisor or an advisory firm that's talking to you about these things. If your advisor is not talking to you about your taxation implications, what you're contributing, what you're not contributing, your Social Security, your budget, your portfolio, your risk management, long-term care, your estate planning, what are they talking to you about? Because all of these things change, and you want an advisory firm that's working with you, that's keeping pace with all of these things. Why? So we can make course corrections, Brad, if we need to. And we're going to need to do that over time because there are changes. There's always changes. That's the only constant, Brad, is change, right? So we need to understand what's happening, digest what's happening, and then understand how those implications affect our clients so that we can then counsel them on things they can do to make either the present or the future be better for them.
As we start looking at how taxes end up being triggered as well, I talk about the runway and understanding how to plan for Social Security and Medicare, which also brings in kind of a magic number for a lot of people on trying to figure out taxes, which is 59.5, when they can start taking more control. Can you lead me into this? Because if I have all my stuff in a bucket for 401ks for a long time, and I'm past this magic age, I'm now kind of allowing somebody else, my employer, to control some of the things that maybe I can take control over, or Northern Alliance Financial can actually take over because there's more options. I want to kind of lead into that as to the triggering effects and taking control of what we can control of. Lead me into that. Why does that magic age give you more options?
It is a magic age because, as you had made mention, that at age 59.5, you no longer have to pay a 10% penalty if you take withdrawals out of your traditional IRA or 401k, right? And so from age 60 to roughly about when you're trying to file for full retire or file for Social Security, there's this window of opportunity for us to be able to try to get ahead of this tax bomb, right? Let's just say you have all of your money in your 401k, which is great. You've squirreled away a whole bunch of money, but you've lived very well within your means. And you've lived very well within your means because you're saving so much, you're paying healthcare costs, and your cash flow is, say, X number of dollars. But those are all deductions now, okay? And as you transition into retirement, you no longer have those same type of deductions. Well, if you've lived well within your means, saying you're netting $5 to $6 grand a month, and you've got a very sizable nest egg in 401k monies, what happens when your Social Security benefit pays you $4 or $5 grand a month and you don't want to touch your IRA monies and you save those for RMDs? Well, when you save those numbers for RMDs at age 73, you could potentially have a tax bomb on your hands, right? So can we create a distribution strategy for you to start taking withdrawals out of your traditional or 401k monies now? Pay taxes on them now because you're essentially in a low tax bracket. And if you don't do anything, you're going to be in a higher tax bracket in retirement. Can we get that tax bill paid now in record low rates, then reinvest that into the market so that you have additional monies that you can pull from that aren't going to be taxable if we utilize specific tax strategies? Because there's all these things that we can do with taxable accounts like brokerage accounts or CDs or whatever that may be. There's all these tax strategies that we can implement to get you the cash flow that you need and still keep you in a low tax bracket.
It is going back to the plan. We plan on investments. We plan on making sure that we have an income. And yet for a lot of advisors, taxes haven't even been mentioned as a potential problem. And I think for many of them is because many of these advisors really are advised by their uppers, can't talk about taxes with our people. Why is it different with you?
Well, I think the key is for a fiduciary advisor, the major difference is that the fiduciary advisor is always going to do what is in the best interest of the client. Well, if you don't know what the taxable implications are of taking money out of your 401k, and then all of a sudden you're going to do a Roth conversion, let's say, hypothetically, it sounds like a great idea, but if you haven't done the planning, all of a sudden, what could happen to your client? Well, you just bump them into a new marginal tax rate. And oh, by the way, they just got penalized because they went over certain thresholds for Medicare, that now they're going to have Medicare penalties going forward because you made a Roth conversion without thinking about the tax implications. So that's why a holistic fiduciary planner is so critically important to what we do. Because we're not just looking at one single thing in the portfolio. No, if we make changes to this portfolio, what implications does it have on income? What does it have on budget? What does it have on my Social Security? What does it have on my Medicare? It could have implications on all of those things, Brad. So that's why it's so very critically important that you are working with somebody that's looking at all of these things, so that there is a plan in place with all of it, with your name written on it, and this is our plan. And if we make a course correction to one particular aspect of this in your whole comprehensive plan, it could affect everything. And you need to know what those implications are before we make any moves. The other thing I want to talk about is going back to what you were saying about the 59.5.
Yeah.
Because as Blake mentioned, this is a moment for us where, okay, we've gotten to the 59.5 point where if we take money out of those qualified plans, we no longer have that 10% tax liability. But the other thing that most people don't know, if you're in a 401k or a 403b, or even you're in the thrift savings plan through the government, that 59.5 milestone is significant because for the first time, most plans are going to say you can take those monies and bring them to a fiduciary advisor who this is what they do, who then can transfer those funds, or what we call a rollover of those funds, into something that now that professional advisor can help you now manage. I deal with people all the time, Brad, where they're simply saying, my money I've saved for 15, 20, 25 years. Now that money where it started, it was just a little bit, it was maybe 50,000, it went to 100. Now it's $250,000. That's a big number. Who's managing that?
Mm-hmm.
I am. I don't want to manage that. This is what they say a lot of times. I don't want to be responsible for that. And then they realize, okay, well, maybe it's the first time anybody's ever said anything. Maybe that's you out there. I don't know. Where this is the first time you've hit that 59.5 milestone, or now you're 60 or above, and nobody ever told you that you can now take those funds, talk to a qualified financial planner, and this is what they do, you may be in medical. Like I wouldn't be operating on myself. I'm not trained, but this is what I do every day. I help people with this stuff. So if that's you out there, then call us, because we can help you move those funds into something that's going to be managed holistically and comprehensively for you.
It is putting together a complimentary written financial plan that includes everything. 877-241-7430. It is all about conquering your retirement in your way, in your time frame. But you have to have a plan. And you've been waiting and saying, I don't know what to do. I don't have control. And I'm not sure that I can manage this myself. Maybe you use some people who've been doing it for decades and decades, because perspective gives you the idea of understanding that no two people are alike in retirement. So let's put together your complimentary written financial plan that will look like no one else's. 877-241-7430. Make the call now. We'll be right back.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
So glad you're with us on Conquering Retirement. Brad Johansen with Lance and Blake, Northern Alliance Financial. We're talking about the tax bombs that you may face. How do we diffuse them? That's why we put together NAFTaxTest.com. You can go to the QR code on your screen, go to the website. It gives you an understanding of what you've been putting away that Uncle Sam still wants to take more of, and some of the solutions that you can use as strategies to keep more money in your own pocket. We talk about longevity, and yet longevity usually ends up with the ladies because they're smarter than us. They end up with most of the money in the end. You may find it shocking. It certainly was shocking for me that the average in America age when a woman becomes a widow is at 59 years old. And then it pushes them into a different tax bracket. We talk about brackets. From the most advantageous tax bracket and married filed jointly to something else. You want to talk about this because the ladies end up with most of the money. And that's what we don't plan for in many cases.
Yeah, it's actually almost a double whammy, Brad, if you think about it, because someone out there, and I've had many viewers calling into the show in this exact situation where they've lost a loved one, and that's tragic, obviously, and they're dealing with the grief of losing a spouse that they've been with all their lives, and now on top of this they go from filing jointly to a single filer, and now all of a sudden their taxes are through the roof and nobody's talking to them about this. So the point is that if you're out there and something tragic has happened in your life, you are not alone. We've had many viewers, many callers that have called in and just basically in tears, not knowing where to begin. And one instance, Brad, I had a widow call in whose husband had done a pretty phenomenal job of accumulating all kinds of assets. But it took us almost 9 months, Brad, after the initial shock of just dealing with the loss of a loved one, her coming in and just kind of being upset and sad. Of course, that's all there, and it's okay. It's okay to be real and emotional with people. They just lost a loved one. But then having the capability, Brad, to go in and speak with a fiduciary advisor where you know that they're going to do everything that they possibly can to ameliorate this pain for you and figure out a plan to go forward for you. Not only to find all the assets, but then to look at the implications and to plan for the implications of the taxes. That's huge. And to be able to go in and sit face to face with somebody and just lay it all on the table and say, I lost my loved one, I don't even know where to start.
Yeah.
You start by making the call, and then we'll help you through this transition process, through this grief process and through this transition process.
It is to finish up, and we have very little time, are Roth conversions right for everyone, even in the situations that they sit married, single, high income, low income? Is it right for everyone to, as they go to this tax test, is it right for everyone to be able to strategize on something like this?
Candidly speaking, no, but honestly, you won't know until you have the conversation surrounding it and you're speaking to a professional about it. There's many times where clients came in and they said, hey, I've heard about these Roth conversions. I really want to identify as to whether or not I should be doing this or if this makes sense, right? And after going through the mathematical equation as to how that's going to affect them long term, sometimes it makes sense mathematically. Sometimes I was able to identify that the tax bill that you're going to be paying up front and the IRMA that you're going to have on your Medicare premiums, you're going to be dishing out more money than you had expected in retirement from a tax planning standpoint. It's a very tricky slope, and I really don't encourage anyone to accomplish them by themselves. You have to speak to a professional, and also loop in your accountant if you work with an accountant, you know, because there's so much information that goes involved to Roth conversions. It's just not like, oh, I want some Roths, let's convert it. You know, there's a lot more implications involved.
It's complicated. Just trying to figure out how your retirement is going to work is complicated. Call for help. 877-241-7430 to put together your complimentary written financial plan that encompasses all of this. Try and simplify it. That's what we do at Northern Alliance Financial. Make it simple to make your money last until your last breath. Make the call now. Thanks for your time here. We'll see you in the office to help with your complimentary plan. See you back here next time.